Good morning, it's Friday, November 8th, about 6 a.m. Central Time. I'm going to be sitting the whole weekend just staring at that thing because of the fact I don't even want to see these markets with all the nonsense we've had with the election, the Fed meeting, the yo-yo action, the silver market, the buy the rumor, the sell the news. I mean, it's been kind of a wild week. I mean, holy smokes. So anyways, get into it here. I'll be on the Schwab Network at 2:40 Central Time today. I'll be on CNBC on Monday at about 1:30. Covering the silver market and also the copper market. So looking at the overnight price action of the metals, and this is what I'm talking about here. Metals are now digesting the news out of China after announcement on new stimulus measures, which triggered some profit taking. So getting up at 3 in the morning again, watching the sell-off here in the metals markets just a little bit. However, we are bouncing off those lowest levels in the overnight session. So this comes as that complete reversal to the upside yesterday. Now, many of you recognized, and I talked about this in the metals minute yesterday, the rally in the copper market in combination with the declining dollar and the declining treasury yields that gave you the opportunity to take some action in the silver and gold market. It was really that massive move in the copper market, and you knew that the correlation between falling dollar, falling yields, rising copper kind of set that perfect storm for that kind of recovery we saw yesterday. So well done for many of you that took advantage of that. And then I also saw many of you that put on multiple positions take some of those off at the end of the day. And that's where it becomes being a good trader. So you treat every trade as kind of a short-term trade, and then you risk manage it, and then those trades develop into longer-term trades. So many of you that I talked to, we had a line in the sand yesterday, 26.50. We didn't want to see it break and take out the overnight lows on the session on the gold market specifically, and a lot of you were using that as your support level. I believe that that level is also a critical level here again for today. So a quick recap, the stock indices, they rose to a new record high on Thursday after the Federal Reserve delivered a widely expected interest rate cut of a quarter basis point. So they take it down to a new range, 4.5 to 4.75. That follows that September 50 basis point interest rate cut that we saw. So the investors we're continuing to digest the implications of Tuesday's election. Mainstream media has always had this hatred for Trump, and what they're doing now is that they've got two issues going on. One, they're solely focused on the tariff rhetoric, right? They want to create this kind of chaos in the market here. But a couple takeaways on that. I believe that it's going to be really difficult for mainstream media to continue with that aggression because of the fact the guy won the popular votes. So regardless of what you think about him, most of America voted for the guy. So mainstream media is going to have to kind of jockey around and reposition the way they present Trump, the way they discuss some of his policies and things like that. Now, the second thing I believe is that the foreign leaders are much more willing to negotiate with them before any tariffs even take place. We've already seen China and Russia reach out to Trump, and Asian equities, they climbed where the lawmakers, they expected to approve this fiscal package overnight worth trillions of won and potentially offset some of the implications of any possible Trump tariffs. I've already seen the numbers of the tariffs, the amount of the tariff that they propose to be applied to China, already those numbers are starting to be scaled back. The second big thing that we saw here yesterday was that Powell, his term goes until May of 2026. Trump cannot fire him whatsoever, and his duration as a Fed governor goes all the way to 2028. I believe that the Federal Reserve already taking decisive action, cutting 50 basis points, cutting another 25 basis points, appease the upcoming administration. And as far as inflation is concerned, if he could restore some relations with Russia, they may improve some of the strategic metals that would come into place, some of the grains that would flow out of Ukraine and out of Russia. And then also, if we can normalize some relations with China with less tariffs, you could start to see things really start to come down. Also, a robust energy complex in the United States can help bring some of those prices down, like gasoline and things like that. So I think that the mainstream media pinning Powell against Trump yesterday, I thought was just completely uncalled for. So if you look at the precious metals market here in the gold market, gold futures did sell off slightly after that robust rally we saw yesterday. 26.97 last, and I did mention that 2700 was that old support. Remember, we traded between 2700 and 2750, and then we broke down. 2650 was the low. Now we're coming back up to 2700. Is this the new price band that we're trading on? So we're going to want to keep an eye on that. A couple things here. We do have the oil market. It is also declining a bit. So we do have some fading geopolitical risks, and also the hurricane looks like it's weakening, so it might not take off as much of the oil that was expected to be set offline. So looking at the silver market, down 24.5 cents, 31.60 last, kind of a wide range. Silver is held about a 90-cent average true range every day. So these types of swings, they shouldn't trigger you whatsoever. It's just the market that you're currently involved with. So 31.60 last on there. Copper's the one that's giving back half of its gains yesterday. It's down 9.90, down 2.23%, trading at 4.33 last. Now copper, I think from the long-term perspective, has a lot of great things that are ahead of it. Now platinum slightly softer as well. Bitcoin, we're seeing corrections there, but the corrections are very shallow. So what we're doing is we're looking at constantly adding to some of the micro Bitcoin futures and going out 1 to 2 months on those. And then the soybean market I talked about yesterday, where traders are front running a lot of those purchases and then thinking that China will increase those purchases. Well, we saw that up 22.5 cents yesterday, closing essentially on the dead high. So China on Friday, they announced that 5-year package totaling 10 trillion yuan, which is $1.4 trillion, to tackle this local government debt problems, and they signaled that more economic support would come in the following year. The program takes effect this year, and it will carry all the way through 2026. That's why I'm saying that if he institutes certain tariffs, that the amount of basis points shaved off GDP will be much lower than expected. So this week's risk and events, obviously we do have the election behind us. We've got the Fed behind us and the interest rate futures. So if you go to the CME's Fed Watch tool, it's implying a 71% chance that the Fed gets a quarter basis point interest rate cut at the December meeting. That's December 17th and 18th. And that now they expect only 2 interest rate cuts going into next year. That's why gold futures are more consolidating. And then the upside year-end target on gold is 2850, and the 3000 comes a little bit farther out into the year. Now, if you look next week, we will have some interesting data, and that's why I think a lot of these products here, like your silver, your copper, some of your energies are going to rise a bit because of the fact we're going to see CPI data come out on Wednesday. That data has been declining. However, we should start to see a small uptick in CPI and core PPI as well. Retail sales data, we'll want to monitor that. And that's where the Federal Reserve comes into this tricky situation where they are seeing certain aspects of the economy improve and others not. Now, a good thing is that Jerome Powell should be around for this duration because we've been easily able to see what data that they monitor and able to front run that data and try and position ahead of certain policy moves and shifts. What we don't want to see is just the Federal Reserve completely dissolved, and then we're going to be left clueless as precious metals traders because much of the impact on precious metals trades comes from the derivative of certain inputs of economic data. Now, looking at metals across the board, most of them have shifted to a neutral trend. Platinum is the only one that still is barely holding the bullish trend. It's not a big deal. Don't be triggered by that. It's just the fact we're coming into a new zone with new elements coming into the mix of things. So gold futures with that neutral, you really want to see it kind of break back above that election sell-off. So 27.65, we get above there, we could start attacking 2800, 2850, and I think that's kind of where we close out the year. There is a seasonal at the end of December where it's buying February gold on December 20th, selling it out January, just past the first week. This is historical data, does not present what could happen in the future. I'm just telling you this is one tool in the toolbox is seasonal analysis. It's gone up 12 out of the last 15 years. Copper futures have also had multiple seasonals in November and December that have pushed prices up that we're going to want to monitor as well. If you look at the gold market, it is forming another higher low on the chart, so we should be able to resume the upward trend. Something of note about copper, this wide range of volatility here. We saw the Chinese export data came out. It reached a 2-year high, 13% year over year. Chinese stocks have done quite well. I think that it was a small pullback in Chinese stocks overnight, which triggered some sell-off in the copper market, but it was copper imports over 500,000 tons, which was the first time since May. You look at the chart of copper on back in May, you could see this angle up, and that's where the contract highs took place. I keep mentioning copper because of the close correlation to the silver market still at the moment in the interconnection with the gold market. Now, silver, I know you guys are looking at, because of the heightened volatility in there, you don't want to see that market trade below 31.15. That's kind of your line in the sand where it's going to break and trigger an additional sell-off and probably a wave lower down to the $30 mark. You want to see that market trigger with the gold market. So used the 27.65 is that breakout on the gold market. When that triggers, you should see silver futures trigger and break out with it. So again, a lot on the plate, a lot of discussion about, different elements of the Fed and different elements of tariffs and things like that. But I think we're going to be all right here. So I hope you guys have a great weekend. I'm just planning on resting and relaxing because this has been a buy the rumor, sell the news type of week here that we've seen. So got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.